Yes, a very good evening to all of you. Right, so did you revise whatever we revised yesterday? Right, whatever chapters, whatever standards, whatever questions we discussed yesterday. I told you to write down a few answers also, that you need to do the writing practice, like say of the audit of the government expenditure, the propriety audit, and so. Did you do that? Right, writing practice done? Right, are you writing answers otherwise also? Yes, so very important now when that you're giving the finishing touch for your preparations for the exams. One, that you do the writing practice, that whatever I know, whether I'm able to write, whether I'm able to present it in a proper manner, am I able to finish my paper in time, whether I have proper time management, is what you also need to work upon. Because say you know all the content, but you're not able to write, or your time management is not good, or your presentation is not good, then obviously it is not going to serve the purpose. And second one, what you need to do just before now getting into the exam hall, you need to look into the MTP, RTP, and the suggested, like not just into the exam hall, there is still some time left over there, but you need to go through the MTP, RTPs, and the suggested, so that you get a confidence that whatever chapter wise I've been studying, and now all of a sudden if a question is asked, whether I'm able to write down the answer. Like say they ask a question on item of financial statement, then there is a question regarding the bank audit, then there is a question regarding caro, then there is a question from the standard on auditing. So different scenarios where there could be a question. So it's okay if one or two chapters more or less, little bit here and done, that's okay. But whatever you know, whether you are able to identify the question, whatever you know, are you able to write down a good answer? That is super, super, super important. Right? So it should not happen that you're stepping into the exam hall and you've not seen any MTP, RTPs or suggested. No, it should not happen that you've not looked into all the MCQs which have been released by the ICAI in their MTPs and their RTPs and so, or the ICI booklet which is there for the MCQ. Right, so I hope you have a note of all of that. Right, so what shall we discuss today? You say, ma'am, you've already opened the chapter which we need to discuss today. Okay, so a little bit we look into the chapter of the items of the financial statement. Then after that, we look into the little bit of discussion regarding the bank audit. Then after that, come to our RTP May 23. Yesterday, we saw over there up to question number 10. And then after that, we look into a few MCQs. Right, then after that, we look into the MCQs. Right, so all of you, all there? Right, let's begin with, okay, right, so audit of the items of the financial statement. Right, so one, this item, it could either be the balance sheet item or it could be the profit and loss account item. That means it could be an income statement caption. Now for a balance sheet item, you have audit procedures wherein you need to check the existence of that particular balance sheet item. Then you would be required to check the completeness of that balance sheet item, then required to check the rights and obligation, whether the asset is a right and a liability is an obligation of the entity on a given date. And then you also may be required to check the valuation of the asset. So in the exam, the question is, like, as an auditor, how would you check the existence of the property, plant, equipment? How would you check? What are the audit procedures you will perform to check the completeness of the property, plant, equipment? What are the audit procedures you will perform to check the rights and obligation of the property, plant, equipment? Or what are the audit procedures to check the valuation? Right, so assertion wise the question is asked. Rather, sometimes the question is so specific, they ask you regarding the valuation, and in the valuation they talk about the inventory, and in the inventory they talk about the valuation of the finished goods or the goods for the resale. Okay, so we need to know assertion wise, okay, what are the audit procedures which are required to be performed by the auditor. So that is one in case of the balance sheet. And then we also have the income statement captions. Right, for the income statement captions, one, we need to check the occurrence, that whether really this transaction has taken place, whether it has occurred. Then we need to check the completeness, whether all transactions have they been recorded. And last, we need to check the measurement, that whether they have been recorded at the proper amount in the correct account and so, right? And also in the correct accounting period, right? So that's the occurrence, completeness, and the measurement, right? So what are these? These are the assertions addressed through the, yes, when you're doing the audit of the items of the financial statements, your assertions which you address through the substantive procedures also. Okay, right. So now when we talk about the occurrence, completeness, measurement, that is for the income statement caption. Do you know what are the income statement captions which we need to audit? Right, which are the income statement caption? Yes, one, you have the sales of goods and services, the sale of goods and services. Then you have the other income, right? You have the sales, then you have the other income. Then you have two expenditure over here. One, the employee benefit expense, and then you have the depreciation and the amortization expense. The depreciation and the amortization expense. Then after that you have the purchases. Right, so you have sales and then you have the purchases and you have the other income, and correspondingly you also have the other expenses. Right, you also have the other expenses, right? So these are the 6 items which are there in the profit and loss account, the income statement caption. And then we also have the items in the balance sheet. Like, what are the items in the balance sheet? We have the share capital. As an auditor, how will you do the audit of share capital? In share capital, there is a specific question over there regarding the application of the securities premium account. Right, that how do you apply the amount in the securities premium account, like for buyback of shares, bonus shares, then also the premium payable on the redemption of any redeemable preference shares, then the commission expense or discount on the issue of any shares or debentures of the company, writing off the preliminary expenses of the company. So that's the application of the securities premium account. Then you also have a question, okay, as an auditor, how will you do the audit of the sweat equity shares? Right, so sweat equity shares, you need to check whether a special resolution has been passed at the general meeting, then whether the resolution specifies the number of shares, the consideration, if any, the classes of directors, employees to whom these shares have been allotted. Right, then also what does it say? The rights and duties of these sweat equity shareholders will be pari passu at par with the other equity shareholders of the company. In case if it's a listed company, whether it has complied with the SEBI regulations. If it's not a listed company, then whether the rules specified in this behalf, rules prescribed in this behalf, whether they have been complied with. Right, so that's for the sweat equity shares. Okay, as an auditor, how you do the audit of the sweat equity shares. Then we have a question over there regarding the shares issued at a discount. What do we say? Any shares issued at a discounted price shall be void. However, discounted shares other than the sweat equity shares. So can sweat equity shares be issued at a discounted price? Yes. And also what does it say? Shares can be issued at a discount to the creditors as a part of the statutory resolution plan or the debt restructuring scheme. Right, as a part of the statutory resolution plan or the debt restructuring scheme. Then you need to check whether it is in compliance with the RBI guidelines or the Banking Regulation Act, right? The RBI provisions or the banking provisions over there. Right, so again, that is for audit of the shares issued at a discount. And in case if the company has issued shares at a discount, one, what does it say? It needs to refund the amount which it has raised through such issue, and whatever is the refund, along with the refund, they need to pay the interest at the rate of 12% per annum. Right, so they also need to pay the interest, and also the amount which has been raised is required to be refunded. Right, then after that you have the audit of the reduction of the share capital. Reduction. So for reduction of share capital, what is required? Special resolution in the general meeting. Then the tribunal order. Then the tribunal order may specify the company to use the words "and reduced" after its name. Then the revaluation of the assets. The accounting entry being passed for the internal reconstruction. The old share certificates being cancelled and the new share certificates being issued. Right? You need to check whether the memorandum of association has been changed, whether the articles of association permit the reduction of share capital. Right, so even if I take one heading over there like share capital, there is so much to discuss regarding the share capital. And then every item of the financial statement which I discuss over there, for every item they talk about the schedule 3 disclosures. Like share capital, what are the schedule 3 disclosures? Then in that schedule 3 disclosures, they specifically talk about the holding by the promoters of the company, what disclosures are required to be given. Right, so what I just discussed with you, right, regarding the share capital. So what does it say for the share capital? Shares issued at a discount, then the application of the securities premium account, then you have the sweat equity shares, then after that the reduction of the share capital, and then you have the schedule 3 disclosures. Right, so for each class of share capital, the following details are required to be given. Now what they did in the correct incorrect, they asked this question: shares in the company held by each shareholder holding more than 10% of the shares is required to be specified. So what you need to say? Incorrect. Not 10%, it is the 5%. Any shareholder holding more than 5% of the shares, specify, you need to specify the number of shares held. Then again a specific question asked in your exams, okay, what disclosure is required to be given as per schedule 3 regarding the shareholding of the promoters? Right, so what disclosure is required to be given? The shares held by the promoters, the name of the promoter, number of shares, percentage of total shares, and the percentage change during the year. Right, the percentage change during the year. And again, promoter means as defined under the Companies Act. Details have to be given for each class of share, and percentage shall be calculated with respect to the number of shares at the beginning of the year. Right, so even this M point, it is a separate question in your exams. I'm not telling you out of my fascination or imagination, I'm telling you practically. So even though if you pick up one item of the financial statement over there, there is lot to study in that one item also. Because you know, every answer, every question that I study, I need to look at it from 3 dimensions. Okay, what could be the MCQ which could be created out of that? Second, what could be the correct incorrect question which could come out of that? Or third, what is the a specific theory question which could come in the exam from the same, right, which is the theory question which could come. And this particular chapter, items of the financial statement, your special focus also has to be on the schedule 3 disclosures. Okay, what are the schedule 3 disclosures for each and every item? Like recent past exam, they asked regarding the details of the cryptocurrency, virtual currency. They asked regarding the details of the amount expended for CSR purposes, right? Then they also have the details regarding the Benami property. And many of the new schedule 3 disclosures, if you see, they are there in order because of the reporting requirement which has come in CARO. They are there because of the reporting requirement which has come under the CARO. Okay, right. So do you know what are the other items of the balance sheet? Share capital too, I told you one. Let me see. Let me assess how much is your exam preparation, that which other items of the balance sheet do we have to audit. Profit and loss account, I have already told you the 6 items. So let me see balance sheet, what you know, so that I see your names also by that reason. Right, which are the other items of the balance sheet that this chapter talks about, the biggest chapter in your syllabus, audit of the items of the financial statement. Yes, so what is it? Yes, you have the other equity. So other equity could also be referred to as the reserves and surplus. Wonderful. Right, then after that you have the discussion regarding the borrowings, right? That is the debentures issued by the company, the term loans taken by the company, the leases taken, the properties taken on lease by the company, right? So that is the lease finance taken by the company. So all forms of the borrowings. Okay, right? Then apart from that you have the tangible fixed assets and the intangible fixed assets, right? So you have the property, plant, equipment, and the intangible fixed assets. Okay, then apart from that, which other item do you have over there? Yes, you have the inventories, right? You have the inventories. Then apart from inventories, what is also there? The cash and cash equivalent. So that is the cash and bank balances, right? You have the cash and the cash equivalents, right? Then after that you also have the trade receivables. You have the trade receivables. Then you have the loans and advances and the other current assets. Right, the loans and advances and the other current assets. Then trade receivable, then you also have the trade payables and the other current liabilities. So along with the payables only, they talk about the other current liabilities, right? Then after that, what is one more item over there? It is regarding the provisions and contingent liabilities. It is regarding the provisions and contingent liabilities. And what was the first item which we had over there? It was regarding the share capital, right? So these are all the items of the balance sheet, right? So how many items of the balance sheet do we have for audit, right? 6, 7, 8, 9, 10, and 11. Right, so 11 items of the balance sheet and 6 items of the profit and loss account. This is what is there in the chapter of the audit of the items of the financial statement. For each balance sheet item, you need to know how to check the existence, how to check the completeness, rights and obligation, valuation, and in addition to that, you should be knowing what are the Schedule 3 disclosures, and for profit and loss account also the occurrence, completeness, measurement, and obviously again the Schedule 3 disclosures. Okay, right. So let us just have a glance through this chapter. Time does not permit us that we go through each and every point over there. But yeah, whatever we can have a brief understanding regarding so that we can write good answers in the exam. Right. So all of you there with me? Right, so reserves and surplus. Now, one exam, what question they ask? Okay, one under each Schedule 3 disclosure, they have given the classification. Okay, what is the classification of the reserves and surplus? So, capital reserve, capital redemption reserve, securities premium, debenture redemption reserve, revaluation reserve, share option. So, that's the classification of reserves and surplus. Then, for each class of the reserves and surplus, it says you need to give the following disclosures. Right, so this was the question asked in your exam. For each component, like say one component is the capital reserve. Now for capital reserve, what you need to give? Opening balance, add less, and the closing. Right, so balance at the beginning of the reporting period, any changes due to change in accounting policy or prior period error, then total profit or loss for the year, dividend, and the transfer to retained earnings, any other change to be specified, and then the balance at the end of the reporting period. In simple language, what it is? Opening balance, add less, and the closing. Right, for each component of the reserves and surplus. Okay, now borrowings, what does it say? Auditor, as an auditor, how will you check the existence of the borrowing, then how you will check the completeness of the borrowings, and then how you check the valuation of the borrowing. Right, so they are not talking about the rights and obligation, they are talking about the existence, the completeness, and the valuation of the borrowing. So whether really have they borrowed the money, how will I come to know whether really have they borrowed the money? I need to check the board resolution. Then I can also obtain the confirmation from the bank financial institution. Then I can verify the loan agreement. I can verify the lease agreement, or I can verify the debenture trust deed in case of the debentures issued by the company. Then in case if any debt has been retired during the year, whatever asset was given as a security, whether that asset has been discharged. Right, and you obtain the written representation from the management that all the liabilities have been recorded. Right, so that is the existence of the borrowings. Then you have the completeness. For completeness, you know what you can do? You can always remember, either for completeness, in case of balance sheet, when you have to check for the completeness, one, you could first check for a schedule. What is a schedule? Opening balance, add less, and the closing. Or you could be like, when it is for the inventory or so, you could check for the cutoff for the trade receivables, and so you need to perform the cutoff test, that whether the transactions have been recorded in the correct accounting period. Right, whether the transactions have been recorded in the correct accounting period. Right, so completeness, what does it say? Obtain a schedule of the short-term and long-term borrowings. Then opening balances, you can check it from the previous year audited financial statements. Then after that, any additional debt taken during the year, then any debt which has been repaid during the year, so borrowings taken and borrowings repaid during the year, and the closing balances that you can tie up with the balances in the general ledger. Right, then any subsequent transactions. Why subsequent transaction? Okay, whether there are unrecorded liabilities at the year end. Okay, it was related to the current year, but it was recorded in the next year. So you check for the subsequent transaction, and you can also obtain the direct confirmations as per SA 505 to get evidence regarding the completeness of the borrowings, to get information regarding the completeness of the borrowing. Then valuation. Whenever we talk about the valuation, you can always mention what is the valuation method. Method means what is the accounting policy. Generally for valuation, we always have a point regarding the foreign currency balances, whether they have been restated, whether the foreign currency balances have they been restated. And valuation here, it is of the borrowing, so corresponding point is going to be the interest. right? So whether interest has been amortized, the discount has been amortized over the period, right? So accounting policies, then again loan agreement, interest and discount, amortization, that is spreading over of the interest. Then foreign currency loans, you need to check the restatement of the foreign currency balances at the year end, and then you can after that verify the loan and debt agreement, the terms and conditions, and so. And then what did I say? After each item of the financial statement, what is given over there is the Schedule 3 disclosures, right? What is given over there is the Schedule 3 disclosures. Okay, right. Then you have the fixed assets, the tangible and the intangible fixed assets. Now, how to check the existence of the tangible fixed assets? Whose responsibility? Physical verification of tangible fixed assets. Physical verification of tangible fixed assets. Whose responsibility? Computer, AC, furniture, whether it is really existing. Whose responsibility to check that? It is the responsibility of the management, right? So as an auditor, I will ask the management, what is your physical verification policy? Then whether they are doing adequate supervision of the personnel who are doing the physical verification. And I'll also obtain from the management a copy of the physical verification report, right? I'll also obtain from the management a copy of the physical verification report. So look at it, you know how you should analyze and how you should have a command over this chapter. Like say, I'm talking about the checking of the existence of the tangible fixed assets, right? The tangible fixed assets. How do you do that? You ask the management what is their physical verification policy. You see whether there is appropriate supervision over the staff who are doing the physical verification. And then you also obtain the physical verification report from the management. But now say I want to check the existence of the intangible fixed assets like the copyrights, trademark, goodwill and so of the company. Now can I have to tell management, have you done physical verification? Can I ask management now, have you done physical verification, right, for the existence of the intangible fixed assets, right? The existence of the intangible fixed assets. Yes, what is an intangible asset? It is an identifiable non-monetary asset without physical substance, held for use in the production or the supply of goods or services, or for rental to others, or for administrative purposes, right? That's the definition of the intangible asset. So here if you look into intangible, it is an identifiable non-monetary asset without physical substance, held for use in the production or supply of goods or services, number one, or for rental to others, number two, or for the administrative purposes, number three. And then I want to check the existence. So now in order to check the existence, now for fixed assets, what did I say? For tangible fixed assets, physical verification. Here what I will do, that whether that intangible asset, is it in active use or it is not in active use. And then I will check the existence of the software by checking the production data, whether it has actually been used by the entity. The software has actually been used, the sale of the related goods and services. And the existence of design and drawing by checking the production data of the company, right? By checking the production data of the company. So when I want to check the existence of the intangible fixed assets, then what I need to see, that whether that particular intangible fixed asset, is it in active use or it is not in active use. If it is not in active use, it should be written off, right? It should be written off. Then I need to check the existence of the software, that whether that software is being used and from that software the sales are being generated for the company. And existence of designs and drawings, I can check by checking the production data of the company, the existence of the designs and the drawings. And what they are doing in the exam, they ask specific questions, है ना, कि अरे स्टूडेंट टेल अस कि हाउ विल यू चेक द एग्जिस्टेंस ऑफ द इंटेंजिबल एसेट्स, और स्टूडेंट हाउ विल यू चेक द एग्जिस्टेंस ऑफ द tangible fixed assets. Are you able to appreciate that over here? Right. Then after the existence comes what? The completeness. So completeness over here is going to be what? Opening balance, add less, and the closing. Right. So verify the movement. That is the schedule. So opening balances, additions, deletions, and the closing balances. Opening balances, you can check it from the previous year audited financial statements. Then you need to check the additions during the year. Then you also need to check the deletions during the year. Then you also need to check the closing balances from the entity books of account. Right, so that will help you write points regarding the completeness. What will help you to write down the points regarding the completeness? Opening balance, add less, and the closing. Right, so PPE schedule, opening balances, then the additions during the period, deletions during the period, and the closing balances. Right, so again a separate questions on the addition to PPE and the deletions to PPE. Right, then you have the valuation. So again for valuation over here, what does it say? Depreciation. Okay, how the depreciation has been charged on all the items. So what is the depreciation method, and whether management has done the impairment assessment. Impairment assessment, whether there is a reduction in the value of the asset, or more than normal reduction in the value of the asset, and whether the management has done the impairment assessment as per AS 28. So that is for the valuation. And last one in the assertion is the rights and obligation. Right, so now tangible fixed asset, it could be a movable tangible fixed asset, or it could be a immovable, like land and building, immovable, but furniture, fixture, computer equipment, that will be the movable fixed asset. Right, so for movable fixed asset, you need to check whether the invoice is in the name of the entity, and for immovable fixed assets like land and building, you need to check the conveyance deed, the sales deed, whether the title deeds are they in the name of the company. Then in case if they've been given as a security for any loan taken from the bank, you can obtain a confirmation from the lender. And again, as an auditor, you can verify the register of the charges, right? So that's for the rights and obligation of the tangible fixed assets. Right, so movable properties are the invoices in the name of company. Immovable properties, whether the title deed, sales deed, conveyance deed, are they in the name of the company. If they've been given as a security against any loan taken, whether you can obtain the confirmation from the lender. And again, auditor, you can verify the register of the charges, right? Auditor, you can verify the register of the charges. But now intangible fixed assets, how to check the rights and obligation? Yes, intangible fixed asset, this is tangible, no? But for intangible, the invoices and contracts, whether they are in the name of the company, like say company is having some patent, some trademark, some copyright or so, whether those invoices, contracts, are they in the name of the entity. Right, so that is regarding the property, plant, equipment, and the intangible fixed assets. And then obviously after that you have the schedule 3 disclosures, right? The presentation and the disclosure, right? You have the presentation and the disclosure. Are you able to follow this, everyone? Right, you have the presentation and the disclosure. Okay, right, so you yes, tangible fixed assets, and after the tangible fixed assets you have the intangible fixed assets. Okay, right, then after that the next item over there is the inventory. Can anybody make a quick guess कि inventory का existence how to check? Inventory existence, how to check? They are saying okay, we have 20,000 cars in stock. So as an auditor, how will you check? Really, do they have 20,000 cars in stock? Right, so inventory existence, how to check? As an auditor, again, physical verification of inventory, whose responsibility? It is the responsibility of the management. So what auditor will do? He will attend the inventory count being conducted by the management. He will be present. He will do the test counting. He will not count all the 20,000 cars. On a sample basis, he will do the counting, right? So auditor will attend the count and he will do the test counting, right? He will attend the count and he will do the test counting. And again, the entity plan. First, you need to ask what are the plans of the management for the what are the plans of the management for the for the inventory, for checking the existence and condition, physical verification of the inventory. Okay, right, so test counts, then whether inventory lying with the third party, you can obtain the confirmation from the third party. Again, you can perform the analytical procedures, check for non-financial information, and so right, then you need to check whether the inventory is in the name of the entity. Now, how to check whether it is in the name of the entity? You need to check the purchase documents, that whether the documentation is in the name of the company, whether the purchase documents, sales receivable records, are they in the name of the company. Then you can review the collateral agreement, the consignment agreement, and the material purchase commitment agreement. Like, then you check whether the invoices are in the name of the entity. Then again, you evaluate the consigned goods. You can obtain the confirmation for the significant items of the inventory. And again, when inventory is lying with a third party, you can obtain the declaration from the third party. You can obtain the declaration. So you should be knowing, okay, what is it that I need to check? So here what I need to check? I need to check the rights and obligation. Okay, they are saying 20,000 car, but who knows whose 20,000 cars these are? Who knows whose 20,000 cars these are? So for that, we need to perform the audit procedures. Right. Then you have the valuation of the inventory. Again, valuation, what did I tell you? First, you need to check the valuation method. Right. Then in the valuation method, you have to check for the valuation of the raw material, work in progress, and the finished goods. In all the three cases, one, what you need to check, that what are the elements of the cost, that what all is included in the cost, right? What are the elements of the cost which have been included? What are the costs which are included? Then in case if they are following the standard costing, you need to compare it with the actual cost. Then you need to check the purchase invoices and damage obsolete inventory, again whether it has been recognized at the net realizable value. Right. For work in progress, you need to know the percentage completion of the work in progress, the stages of production, the elements of cost, and it should exclude any abnormal wastage factors. Then you have the finished goods. Have they asked specific questions in the exam? Yes. Right. So inventories, what does it say for finished goods? Whether the costs have been included. Then inventories have been valued at the net realizable value. If they are fetch a value lower than the cost, we say no. The principle is what? And a cost or NRV, whichever is lower. And a cost or net realizable value, whichever is lower. Then again, you need to check for the obsolete, damage, and the slow moving, non-moving inventory. And again, you can obtain the inventory aging schedule from the client. Okay, how old is the inventory? The more older it is, the more you might have to reduce the value of the inventory. Right. So the inventory aging, that how old is the inventory. Right. And then the schedule 3 disclosures. Then you have the cash and cash equivalents. After that, you have the trade receivable. Did you see the schedule 3 disclosures for the cash and cash equivalents? What does it say? Cash and cash equivalents. One, the balance with the bank, then the checks, right? So one, the balances with the banks, then the checks, drafts on hand, then the cash on hand, and then the others. And then after that, what other classification is to be given? Earmarked balances, that is funds which have been kept aside for a specific purpose, separately stated. Then balances with the bank held as the margin money or security against borrowings, again shall be disclosed separately. Then repatriation restrictions, that is you cannot transfer the funds or so, again should be separately stated. And bank deposits with more than 12 months maturity also to be disclosed separately. Right? Can they ask this as a question in the exam? Yes, the schedule 3 disclosure requirements in case of the cash and cash equivalents. Okay. Right? Then you have the trade receivable. Trade receivable, what you want to check? Existence. Okay, whether really this debtor of the company exists. So how to check whether debtor exists? You need to check the invoices. And what you need to check? That one invoice should not be recorded more than once. And the invoice should, the receivable balance should be recorded on the basis of the original invoice, automatically recorded in the general ledger from the original invoice. Right? You want to check the existence. So you also need to obtain the aging report. Okay, since how long is this particular debtor balance outstanding? Then whether that debtor, if he has paid you the money, that means whatever was showing that this debtor really existed, only then he has paid. Right? So that is, you need to check the realization, whether it is invoice wise or whether it is an on account payment which has been received. Right? Then large balances, you need to ask the reasons and justification. A very important procedure to check the existence of the trade receivable is to obtain the direct confirmation. And if any discrepancy revealed, you need to investigate. And if no reply is received, you need to perform the alternative audit procedures. Right? And also you need to check for related party, list of receivable, and the analytical procedure. Right? So this is for checking the existence of the trade receivable, that is the debtors of the company. Then you have to check the completeness of the trade receivable, that is whether all the debtors of the company, whether all the debtors have been accounted for. So how to check whether all debtors have been accounted for? You need to perform the cut-off procedures. Again, this is a specific question in your exams. Right? The auditor needs to satisfy himself of the cut-off. Cut-off, you know that the transaction has been recorded in the correct accounting period. What does it say? For invoices issued during the last few days, like say the last 5 days of the reporting year, that is cut-off date, have been included in the debtor. So invoices issued in the last 5 days have been included in the debtors, that the goods have been dispatched and are not lying with the company. And all goods which have been dispatched have been invoiced. So all what is invoiced is dispatched, and all what is dispatched is invoiced. No? You don't agree with me? All what has been invoiced has been dispatched, and all what has been dispatched has been invoiced, and no goods dispatched after the year end have been invoiced. So if they have been dispatched after the year end, then it says it should not be invoiced. Right? Yes, it should not be invoiced, right? So that's the cut-off procedures for the completeness. Then invoice testing, then the shipping dispatch log, that is the goods outward register, then the receiving log, so that's going to be your sales return. Right, so sales and the sales return. Then you also need to check for the credit memos, discounts, incentives. Right, the credit memo. So in case if there is a sales return, a credit memo would be issued. Then the discounts, incentives, bill hold, and the supporting documentation. Okay. Then you have the valuation of the trade receivable. What is that? The valuation of the debtors. The valuation of the debtor, again, number one point, the method. And after the method, the aging report. Then you say, why this debtor is getting so old? They say it is a fighting debtor, litigation. Then because it is a debtor under litigation, it could be doubtful of the recovery. Because it is doubtful, you may have to make a provision. Because you make a provision, you also may have to, say that it's a bad debt. And because it's a bad debt, you may also decide to write it off, right? So write off should be done only with the appropriate authority. Right? Then it could be the foreign currency debtor. So for that, you need to check the restatement and the related party transactions, and also the compliance with the CARO. Right, and also the compliance with the CARO, right? So that is regarding the trade receivables. Then after the trade receivables, you have the trade payables and the other current liabilities, right? Trade payables and the other current liabilities. Then after that, we have the loans and advances and the other current assets, right? You have the loans and advances and the other current assets. And the last item in the balance sheet is regarding the provisions and contingent liabilities, right? The last item over there is the provision and the contingent liability. What is a provision? It is a present obligation as a result of past event. It is probable that an outflow of resources embodying economic benefits will be required to settle the obligation, and a reliable estimate can be made of the amount. Okay, that is a provision. And what is a contingent liability? A possible obligation that arises from the past event, whose occurrence will be confirmed by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. Or it is a present obligation, but you are not sure that outflow of resources will be required, or you cannot measure the amounts reliably, or the amount cannot be measured reliably. Okay, right. So that is regarding the balance sheet. And then you have the income statement caption. Now in the income statement caption, one, you have the revenue, that is the sales of products and services. In the sale of products and services, what we have? The occurrence. In occurrence, you need to check for the overstatement of the revenue, right? Okay, actual revenue of the company is 100 crore, but they are saying no, we have 800 crore of revenue, right? So there should be no overstatement of revenue. How can you check for that? Because single sales invoice is not recorded twice, or a cancelled sales invoice should not be recorded. So check whether one invoice but recorded twice, or an invoice which has been cancelled but still it has been recorded. Then just check the few invoices with their relevant entries in the sales journal. Then you also obtain confirmation from few of the customers regarding the genuineness of the sales transaction. So if it's a genuine sale transaction, that means there are no fictitious customers. Then check whether shipments have been done without the consent of the customer, right? Then customer obligations are contingent on future actions. Unearned revenue has been recorded as earned, or there is substantial uncertainty about the ultimate collection. Right, so what does it say? Overstatement of the revenue. So can this be a specific question in your exams? The overstatement of the revenue. Right, the overstatement of the revenue. So you need to check for the invoices, need to check whether it's a genuine sales transaction, whether it is fictitious, whether shipments are done forcefully without the consent of the your customer, or whether customer obligations are contingent on other actions, unearned revenue is recorded as earned, or the substantial uncertainty about the collectability. Right, then again completeness, you have the cutoff test and the cutoff error, and then again you have the measurement. Okay, right. Other income, what they did, in the exam, they've asked so many questions rather than of sale. They've asked the questions regarding the other income. right? So other income, there are three other income. One, the interest income on the FD. Second is the dividend income, and third one is the profit or loss on the sale of investments in the mutual fund, right? The interest income, when do you recognize it as income? On the time proportionate basis. Dividend income, when the right to receive the payment of dividend is established. Yes, it was probable that economic benefits will flow to the entity and the amount can be measured reliably, right? And right to gain or loss on sale of investments in the mutual fund, it says on the date on which the transfer has been done, on the transfer of the title from the entity, right? So this is when the income is to be recognized, the recognition criteria. And then you have the audit procedure. What is the audit procedure? Interest, FD interest income. Obtain a list of the FD, then check, verify the mathematical accuracy of the interest calculation. Then all FDs which are outstanding, obtain the direct confirmation. Then also a confirmation regarding the interest income and a copy of the form 26AS. Then dividend income, only when the right to receive the payment of dividend has been established. And gain or loss, you need to check whether it's the difference between the redemption price and the carrying value of the investment, right? So that's regarding the other income. Then you have the purchases. For purchases, they talk about the under overstatement of the purchases. One very favorite question of ICAI in checking the completeness and measurement is regarding the analytical procedures which you need to perform to check the overall reasonableness of the purchase quantity and price. Tell me honestly, how many of you have already prepared this particular answer, or you remember that you have prepared this answer? Honestly, genuinely, tell me. Analytical procedures for checking the overall reasonableness of the purchase quantity and price. Do you remember? Have you done it? Not done it? My words are still reaching to you. Little bit of time it takes. After they reach to you, then you think, then you type, then you send, then I read. So it takes time, no? Yes? No? Do you know whether this question has been asked in the exam? Yes? You say, ma'am, today I am seeing the chapter with you for the first time. I never had the, the confidence only, or never had the thought only, okay, how do I see such a big chapter? Yes? So I'm happy that I have honest students who are attending my session over here. Okay? Yes? Yes, I'm saying yes, but you are saying no. Okay, right, no problem. But you're listening to me. That's so nice of you. Okay, right. So let's talk about the analytical procedures. What are the analytical procedures over there? Yes, what are the analytical procedures? So two times this question has come in the exam. Okay, right. So what are the analytical procedures? Consumption analysis, stock composition analysis, ratio analysis, and the quantitative reconciliation. So first step you need to remember, consumption analysis, then stock composition analysis, then the ratio analysis, and then the quantitative reconciliation. Consumption analysis, the raw material consumed. Consumption analysis, the raw material consumed. In stock composition analysis, the raw material as a percentage of the total stock. In ratio analysis, the creditor turnover ratio and the stock turnover ratio. And quantitative reconciliation, opening stock, add purchases, less consumption, closing stock. Right, so that's the part 2 over there, right? Raw material consumed, then raw material as a percentage of total stock, creditor turnover ratio, stock turnover ratio, and the closing stock with the is opening stock, add purchases, less consumption, and the closing stock. Okay, right. Then what does it say? Raw material as a percentage, or yes, raw material consumed as per the manufacturing account, and compare the same with the previous year. Second one also, what do they say? Compare the same with the previous year. Compare with the previous year. And then once you compare it with the previous year, what you do? Ask for the reasons from the management if any significant variations are found. Ask for the reasons from the management in case of the significant variations. right? So what does it say? Consumption analysis, then the stock composition analysis, ratio analysis, and the quantitative reconciliation, right? Consumption analysis, the raw material consumed current year, compare it with previous year and ask reasons to the management for any significant variation. Then stock composition analysis, raw material consumed as a percentage to raw material as percentage to the total stock, again compare it with the previous year and ask reasons to the management for the significant variation. Then the ratio analysis, creditor turnover ratio, stock turnover ratio of the current year, you compare it with the previous year. And quantitative reconciliation, opening stock, add purchases, less consumption, closing stock. Okay, right? So that's the analytical procedures over there regarding the purchases. Then you have the employee benefit expenses. So you need to check the employees which have been hired during the year, which have been fired during the year, and those who are continuing with the organization. So for that you need to check the employee attendance, the list of employees, the salary register, then also the employee benefits, PF, ESI, right? And also the analytical procedures, right? So one, the employee could be a new joinee, or it could be an employee who has stopped working for the company, or it could be an employee who continues to work for the company, right? So hired, fired, or it could be a continuing employee. So you need to ask for the employee attendance, list of employees, and the salary register, and also need to check for employee benefits, PF, ESI, and you can perform the analytical procedures. Okay, then depreciation, amortization, expense. Then you have the audit procedures for depreciation, amortization, and then you have the other expenses. And again, the question which is asked in your exams is, what are the attributes while verifying the other expenses? And other expenses, rent expense, power and fuel expense, legal professional charges, insurance expense, traveling expense, repairs and maintenance, printing and stationery. So those are the other expenses of the company. So what are the attributes? What are the things which you will check for when you're checking the other expenses? One, you will check whether it is related to the current period. Second, you will check whether it's a revenue expenditure and not a capital expenditure. Third, you will check the supporting documents. Then you will check whether it has been classified under the correct expense head. Then you will check whether it has been properly authorized. And you will check whether it is related to the business and not a personal expenditure. Whether it is related to the business and it is not a personal expenditure. Right? So what are the points we need to check? One, whether the expenditure is pertaining to the current period. Then whether the expenditure is a revenue expenditure and not a capital expenditure. Then whether the supporting documents and a valid supporting documents. Then whether it has been classified under the correct expense head. Then whether it has been properly authorized as per the delegation of authority matrix and it is related to the entity business and not a personal expenditure. Right, so that is regarding the other expenses. And then I told you towards the end you have the CSR disclosures which are required to be given. Then the Benami property, right? Any proceedings initiated or pending under the Benami law, right? Relationship with the struck off companies, the ratios to be disclosed, and also the details of the cryptocurrency or the virtual currency, right? So what is the cryptocurrency? What is the profit or loss on sale of profit or loss on transactions involving the crypto virtual currency, amount of currency, and the deposits or the advances from any person for the purpose of trading or investing in the cryptocurrency or the virtual currency. Okay. So, yes, now this is what is there in the chapter. But apart from what is there in the chapter, if you look at the question bank, what they do in the question bank, you see some specific questions over there. Okay, as an auditor, how will you do the audit of the provision for income tax? Or as an auditor, how will you do the audit of the advertisement expenses? Or as an auditor, how do you do the audit of the foreign travel expenses, right? So that is how some specific questions are also asked over there. Right, so let me just come to the company audit, and then after that you have the items of the financial statement, right? And in the items of the financial statement, just give me a moment and just go to that file. Right, so in the items of the financial statement, you also have some specific questions over there, like regarding, say, the payment of the taxes. Then also you have, yes. right? Then you have the questions regarding the rent expenses, the advertisement expenses, foreign travel expenses, employee benefit expenses, right? So you need to study these specific questions also. So how can you cover these? You look into the MTP, RTP of last few attempts, and that will give you a good coverage. Okay, right? So all good? Are we good? Yes, one big chapter, 6, 7, 8 marks weightage in the exam. Don't know, 2 questions if they come, then 8 mark, 1 question if it comes, 4 marks. If question comes incorrect also, MCQ also, main paper also, then 10, 12 marks of the weightage of the chapter. And so you go to the exam hall and then only you come to know how much is the weightage of a particular chapter or so. Okay, right? So what do you know about the bank audit chapter? Yes, let me see. Central government guaranteed advances. What do you know about the central government guaranteed advances? Are they required to be treated as an NPA? Yes, central government guaranteed advances need not be treated as an NPA provided there is the adequate margin and the guarantee has not been repudiated when invoked. However, this does not apply to the state government guaranteed advances. It does not apply to the state government guaranteed advances. Okay, right. Then after that, what do we say? Advances against the term deposits, NSC, IVP, KVP, life policy. Again, what does it say? Need not be treated as an NPA provided there is adequate margin in the account. Right. When does an asset of a bank become a non-performing asset? When does an asset of a bank become a non-performing asset? So it says any credit facility if it is overdue for more than any credit facility of the bank if it is overdue for more than, yes, overdue for more than 90 days, right? Overdue for more than 90 days. Then CC overdraft, when does it become an NPA? When it gets the out of order status. When does it get the out of order status? One, when there are no credits continuously for 90 days, or it exceeds the sanction limit, or the credits are not enough to cover even the debits covered, to cover the debits during the period, the interest which has been debited during the period. Okay, right. And agricultural advances, what does it say? For short duration crops overdue for more than 2 crop season, and for long duration crop if overdue for more than 1 crop season, then an asset of a bank becomes a non-performing asset. So it could be a standard asset. Under standard asset, it could be a regular asset or it could be a special mention account, right? So SMA 0, SMA 1, SMA 2, right? So SMA 0 showing stress signals. Then after that you have the SMA 1, which is 31 to 60, and then you have 61 to 90 days overdue. So it's not overdue for more than 90 days, but it's overdue for more than 61 to 90 days. So it looks like very soon it will be an NPA. Okay, and then NPA classification is 3: substandard, doubtful, and the loss. What is substandard? Right, substandard, right? NPA up to 12 months is substandard. NPA more than 12 months, then it goes into the doubtful category. And loss asset, loss has to be identified by the bank, the RBI, the internal, external auditors or so. Okay, right? So we have the, what you say over here, the discussions regarding the, right, the types of the banks, then the peculiarities, then the regulatory framework, then RBI, it is the regulating body. What is the function of the RBI? Issuing currency, then regulation of the issue of the currency. Right, so one, issuance of the currency, then regulating the currency issue, then acting as a banker to the commercial and other type of bank, and also acting as a banker to the central and state government. And besides this, RBI has also been interested with the regulating the activities of the commercial and other type of banks. Right, so acting as a banker and also regulating the activities. Okay, so those are the important functions of the RBI. Right, then this is very favorite of the ICAI for the MCQs, right, regarding who appoints the auditor in case of a bank. Right, so generally the auditors of a bank are appointed by the members at the AGM, right? So private sector bank, like say who will appoint the auditor? The auditor will be appointed by the auditor will be appointed by the members at the AGM. However, in case of a nationalized bank, the auditor will be appointed by the concerned bank acting through its board of directors. In either case, the approval of the RBI is required before the appointment is made. Then the auditors of the State Bank of India are appointed by the Comptroller and Auditor General of India in consultation with the CG. Right. The auditors of the subsidiaries of State Bank of India are appointed by the State Bank of India, and the auditors of the RRBs, that is the Regional Rural Bank, are appointed by the concerned bank, that means by the Board of Directors in consultation with the approval of the central government. Okay, right. So this is regarding the appointment of the auditor. General provision that the auditor of the bank is appointed by the members at the AGM. Then in case of a nationalized bank, the auditor is appointed by the concerned bank acting through its board of directors. Either appointed by shareholders or appointed by the board of directors, the approval of the RBI is required before the appointment is made. Then the auditors of State Bank of India are appointed by the CNAG. The auditors of the subsidiaries of State Bank of India are appointed by the State Bank of India. And RRB, the auditors are appointed by the bank concerned with the approval of the central government. And then the auditors report what the matters the auditor needs to report. Then in addition to the main report, the auditor also needs to submit the LFAR, the long form of the audit report, and it has to be submitted in the format specified by the RBI, and it is to be submitted before 30th June every year. And 30th June every year. So again, a favorite one for the MCQ, 30th June every year, right? Then you have the bank audit approach, right? So here we have a very favorite question of ICAI, the ETD. What is the ETD? The engagement team discussion. You say, oh yes, now we have to do a bank audit. So now when you have to do a bank audit, it says now you 20 people are going to do the bank audit. First, at least have some discussion amongst yourselves. Right? So what does it say? Why this discussion should be there? This discussion provides an opportunity for the more experienced team members to share their insights with the less experienced team members. Then it provides an opportunity to exchange the information about the bank's business risk. It helps to understand amongst the engagement team members the results of the risk assessment procedures and the decisions about the further audit procedures. The discussion also provides an opportunity regarding those areas with a susceptibility of material misstatement, and the susceptibility of the bank's financial statements to material misstatement. And obviously these discussions should be done at the planning stage of the audit, right? So what does this discussion provide for? It provides an opportunity, it provides an understanding, it again provides the possibility, susceptibility to where there could be a material misstatement, and obviously these discussions have to be done at the planning stage of the audit. Okay, then what do they discuss in these engagement team discussions? So we said no, there has to be ETD, engagement team discussion. So what does it provide for? Then what do they discuss? So what do they discuss? Errors which are likely to occur, so which may happen in the future. Then errors which have already occurred in the prior periods. Then method by which fraud may be perpetrated. Then audit responses to engagement risk, pervasive risk, and the specific risk. Right? So errors which are likely to occur, errors which have been identified in the prior years. Then methods by which the fraud may be perpetrated. So again, the risk, right? Audit responses to engagement risk, pervasive risk, and the specific risk. And now if you know that there is a fraud, this is how a fraud could be done. Need to maintain the professional skepticism and need to remain alert for information or other conditions that indicate that there may be a material misstatement. And then one more small question over there. Okay, what are the advantages of the ETD? What is ETD? The engagement team discussion. So what are the advantages of the engagement team discussion? So one, it gives emphasis regarding those areas where there is a susceptibility to material misstatement due to fraud. Then now again you can decide upon the delegation of the work, and then when you decide upon the delegation, you say, oh, we don't have anybody who can do this checking of this area, so you may decide to involve a specialist to address the issues related to fraud. Right? So you may decide to involve the specialist, right? So advantages of such a discussion, right? So I'm telling you, it's an important area for you to study, the ETD, that is the engagement team discussion, right? That's regarding the engagement team discussion. Okay, right? Then you have the bank's entire audit approach over there, right? Then you have the types of the advances. One, it could be a funded advance or a non-funded advance. Funded advance which involves the actual transfer of the funds, and non-funded advance which does not involve any transfer of fund, like bank guarantees given or so. Right. And what is the legal disclosure requirement? One, the bills purchase discounted, cash credit, overdraft, loans repayable on demand, and the term loan. This is first one. Then secured, covered by tangible, secured, covered by bank government guarantee, and the unsecured. And then after that, you have the advances in India and the advances outside India. Okay, what are the mode of creation? One, there could be a primary security and a collateral security. Primary security is the principal security against which the credit has been extended by the bank, and collateral is the additional security, right? And then what are the mode of creation of the security? One mode of creation of the security is the mortgage. Then another mode of creation of the security is the pledge. Then another mode of creation of the security is the hypothecation. Then you have the assignment. Then you have the set off. And the last mode of creation of the security is the lien. Right, so you have the mode of creation of the security: mortgage, pledge, hypothecation, assignment, set off, and the lien. Okay, and then you have the RBI prudential norms, right? NPA, when it is overdue for more than 90 days, or the CC limit has got the out of order status, right? When does it get an out of order status? When there are no credits continuously for 90 days, or it has exceeded the sanction limits, or credits are not enough to cover even the interest debited during the period. How much provisioning is required? Substandard asset, 15% provision; loss asset, 100% provision; and for doubtful asset, what does it say? Up to 1 year, 1 to 3 year, and more than 3 year. And secured and unsecured. Unsecured portion always 100%, and secured portion 25, 40, and the 100%. Okay. And then government guaranteed advances. I just told you, na, central government guaranteed advances need not be treated as an NPA till the time the security is not repudiated when invoked. However, this does not apply to the state government guaranteed advances. Okay. Right, then accounts where there is an erosion in the value of security, right? So say there was a security whose value was 100 and now it has become, say, 35 rupees, right? So there is more than 50, the value of the security is less than 50% of the value assessed by the bank. It says straight away to be classified as the doubtful asset. And say the value of security has become 4 rupees, right? So less than 10% of the outstanding in the borrower account, then straight away to be classified as the loss asset, right? Straight away to be classified as the loss asset. Okay, then you have the computation of the drawing power. So one, you have the sanctioned limit and the drawing power, right? Drawing power is calculated on the basis of the stock statement, and sanction limit is the total expenditure that a bank is ready to take for a particular client. And an account has to be kept within both the drawing power also and the sanction limit also, right? So what is the bank's duty? They need to calculate the working capital. And on what basis they calculate the drawing power? On the basis of the current stock statement. So how much latest stock statement? It says up to 3 months, but older than 3 months, then the account will be deemed as irregular. And if the stock statement is older than 3 months, then it will be deemed as the irregular. And then it talks about the stock audit and the auditor's concern. Yes, then we have this very favorite question over there: audit procedures for the audit of advances. Okay, I'm doing the audit of a bank. This bank has given lot of loans. That means it has given the advances to its customers. So how do I do the audit of those advances? Right, so one, what does it say? Whatever advances are seen in the balance sheet of the bank, they are outstanding as of the date of the balance sheet. Right, then what does it say? They reflect the amount which is due to the bank and there are no unrecorded advances. Then these advances, are they supported by the loan documents? Are they properly valued? Is there proper valuation of the advances done? Whether they have been disclosed, classified, described in accordance with the recognized accounting principles and the statutory requirements, and whether the appropriate provisioning has been done towards the advances. So where we are talking about the audit of the advances, right? The audit of the advances. And again, as an auditor, you can perform the substantive procedures. So it says examine all large advances, and other advances, it says you examine on a sample basis. Then you check those accounts which are the problem accounts. Then you also check those accounts which have been adversely commented upon by the RPI. Right, and what is a large advance? It says if it is 2 crore or 5% of the aggregate year-end balance, whichever is less. right? So that's how they define the large advances over there. Okay, right? So that's regarding the audit of the advances. And then you have the question regarding the income of the bank and the expense of the bank. So again, what is the income of the bank? Interest income and the other income of the bank. And then you have how to do the audit of this income of the bank. So one, you need to check whether the income of the bank has it been properly recorded. What does it say? Whether the recorded income from those transactions which took place during the relevant period is pertaining to the bank and there is no unrecorded income and the income is recorded at the appropriate amount. Right, so you need to check whether the income has been properly recorded. Then if it exceeds 1% of the total income, then it has to be recognized on the accrual basis. However, if it is less than 1% of the total income, then it can be recognized on the cash basis. Right, what does it say? RBI has any income which exceeds 1% of the total income, the income is to be taken on the accrual basis. However, if it is less than 1% of the total income, then what does it say? It can be recognized when received. Right, so if it exceeds 1% and if it does not exceed the 1%, then if there is what you say, certainty regarding the ultimate collection, it is not unreasonable to expect the ultimate collection, then the income should be recognized on the accrual basis. However, if there is uncertainty regarding the ultimate collection, then the income should not be recognized, right? So revenue certainty, revenue uncertainty. So if you're certain about the collection of the income, then you recognize the income on the accrual basis. However, you have a doubt regarding the the collection of the income, then what does it say? The income is to be recognized on the cash basis. Are you understanding? One, auditor, you need to check whether the income has been properly recorded. Then if it exceeds 1%, accrual basis, less than 1%, cash basis. If there is a certainty, then accrual basis. Uncertainty, then again the cash basis. Okay, right? If there is certainty, then accrual basis. Uncertainty, then the cash basis. And then they talk about the advance against the securities. Again, it says it need not be treated as an NPA. You can take the income into account also on the accrual basis, provided there is the adequate margin. Bills purchase, what does it say? The income is to be apportioned between the 2 years. Bills for collection, only when the actual bill has been collected, then the income is to be recognized. Any renegotiation, reschedulement fees are to be recognized on the accrual basis. Right, so that is the income of the bank. And then after the income of the bank, we have the question regarding the expense of the bank, and we have interest expense, operating expense, and the provisions and contingencies. Right, the interest expense, operating expense, and the provisions and contingencies. So now audit of the interest expense of the bank. At audit of the interest expense of the bank. Again, what you need to check? The overall reasonableness of the amount of interest expense. For that, you need to check the average quantum of the respective liability. So overall interest expenditure, you need to check the overall interest expenditure. Means I have an account with the bank. Against that account, the bank will be paying me interest, the balance in that account. Right. So for me, it is income, but for bank, it is going to be an expense. Right, so you need to check it with the average quantum of the liabilities. Then you also need to check it with the weighted average interest rate, that you compare it with the actual average rate of interest. Then you also compare it with the figures of the previous year. You analyze in month on month, and you also check the average balance. Then you test check the calculation of the interest expense and whether there has been any change in the interest rates. Right, whether there have been any change in the interest rates. Right, these questions are very, very important, which I am discussing with you right now. And what am I discussing with you? Income of the bank, and now expense of the bank. What are the expenses of the bank? Interest expense, operating expenses, and the provisions and contingencies. Right, so interest expense, what does it say? How to do the audit? You need to obtain evidence regarding the overall reasonableness. So for that, what you do, auditor, you calculate the weighted average rate of interest, compare it with the actual average rate of interest. Right, then what does it say? Compare it with the previous year figures, previous year rates of interest. Right, then analyze month on month and the average balance. Then you test check the calculation and also check whether there is any change in the interest rate. Second one, the audit of the operating expenses of the bank. Again, a question already asked in your exams. Right, so bank also has repairs and maintenance, printing and stationery, and advertisement expense, and so audit of the operating expenses. So one, whether the operating expenses, are they properly authorized? For that, you need to study the system of the internal control. Then you need to observe whether there are any divergent trend. Okay, all of a sudden the what do you say, the advertisement expenditure of the bank has increased this year, right? So any divergent trend. So divergent trend, that means I'm performing the substantive analytical procedures to assess the reasonableness of the expense by calculating their ratio to the total operating expenses. So advertisement expenditure as a percentage to the total operating expenses of the bank. Advertisement is just an example. And then you also need to check the supporting documents and the calculations, right? The supporting documents and the calculations. So that is the audit of the operating expenses of the bank. Right? How do you do the audit of the operating expenses? System of internal control to check whether there is proper authorization, then whether there are any divergent trends, then substantive analytical procedure, expense to total, total expense, total operating expenses of the bank, and then also you check the supporting documents and the calculations. And then last one over there is the audit of the provisions and contingencies, right? So again, you need to ascertain the compliance and obtain an understanding of how they compute the provision, how they do the classification into standard, substandard, doubtful, and loss. Then also the breakup of the assets. Then so this is all regarding the provision for the NPA. And then after that, they talk about the tax provision and the provision for the expenses. Right, the tax provision and the provision for the expenses. Right, so I can give you one small piece of advice over here. Anyways, nowadays nobody requires advice now. You say, no, ma'am, now we are in such a situation, we'll listen to anything. 4 months back, you would have told us anything, we would have not listened to anything that you say. But today, if you say, there is a higher possibility that we will listen to what you say. Yes, is that so? Yes, is it so that today there is a higher chance of you listening or following or, complying with what I tell you? Yes, have we discussed 2 chapters? Those of you who would have the patience and the determination and the perseverance to be with me, all 3 days you've been there with me. I hope it's been beneficial for you. Right, so what advice I want to give you for this particular chapter, that not necessary that you always start from the beginning of the chapter, that you start with the peculiarities involved in bank or the regulatory framework or the RBI. Start with the expense of the bank, start with the last expense of the bank, provisions and contingencies. Then after that you come to the audit of the operating expenses of the bank, then the audit of the interest expense of the bank, then come to the income of the bank, then after the income of the bank study the advances of the bank, and then come to the introductory part of the chapter. Then look into all the correct and incorrect regarding this particular matter. Then after that look into the MCQs which are there regarding that matter. So wow, what a comprehensive 360-degree preparation. You are mind-blowing. You are amazing in preparing for the exams. Once you've put your heart and life into your preparation for the exam, that it's difficult to fail. That type of a preparation you have done for yourself. You just have to get 40, right? Ma'am, don't say just. Just is not the correct word to use over there. You have to just get 40 and just get 50. And 50. Why? Because 40, 40, what to do of all the 40, na? Aggregate problem will be there. So 50 we have to get. Whether we like, dislike the subject, we say 50 from all. Okay. If anything more comes, what if you get 73? Any problem? Any problem? Any disaster? Absolutely nothing. 73, 83, 93, 103, wonderful. No problem at all. When is the problem? 39 is the problem. 38 is the problem. And 58 is the problem, because then you are not able to get the exemption also. You get my point, everyone? Okay. So what you will do now, last few days, finale, just before preparing for the exam, ragad ke nikalo subject ko. You'll say, ma'am is again speaking in Hindi. Okay. Just thoroughly wash out the subject. Thoroughly study the subject. Let it be whatever MTP, RTP, question paper, study material. Let it be your notes, whichever you've prepared, whichever classes you have attended, all material, whatever learning, memory, whatever concepts you need to know. All holistic 360-degree preparation should be done of the subject. Is it clear to all of you? Right, so let us go further. Let us look into a few questions in the RTP May 23, and then after that look into a few MCQs so that we can then conclude with our session. Okay, right, so all set, everyone? Do you have any other questions? You say, ma'am, only institute has questions for us. We don't have questions for anything. Yes, anybody? Any questions? ओजा जी अच्छे मार्क्स लेके आना. Get good marks, all of you rather. Why only him? But yeah, all the names that I'm seeing over there, all of India, all the states of India, all the union territories of India, everywhere, from all places, right? We need to get the amazing marks and the rank holders and the exemptions and all. Doesn't matter which part of the country you are writing the exam from. Yes, all good. How many hours are you guys studying every day? Sometimes couldn't concentrate. Huh? So that's a sign of trying to concentrate. No, you realize you're not able to concentrate. So if you're not trying to concentrate, you won't realize that you're not able to. So continue with the effort. You will be, just take a deep breath in and out, and I think you should be able to concentrate, because we can't focus or put our effort over there on the like how to work on that. Now we have no time other than just preparing for the exams. Okay, location of the description of the auditor's responsibility for the audit of financial statements is always within the body of the audit report. No, it is incorrect. It could also be given as an appendix to the audit report, or also a web link thereto could be provided. Right, so the auditor's responsibility paragraph, that first sentence, that auditor you need to obtain the reasonable assurance, that will be there in the main body of the audit report. But we have the other points, that auditor you need to maintain professional skepticism, you need to exercise professional judgment, you need to identify, assess RMM. Those points may not be included in the main report. They may be put in the main report, but they may also be put as an annexure to the main report, or a link can be provided there too. Right, so that's the answer to that particular question. Okay, I am though waiting to teach you guys CA final audit. So just quickly finish with intermediate, and then let's very quickly meet at CA final. Is that right? Okay, right. So let's come to a few questions over here. So we've already looked into up to question number 12. Now let's look into the question number 13, right? So those of you who are attending the session today, in day 1, day 2, you will see question number 1 to 5 and 6 to 12 being discussed over there, right? So right now we come to the question number 13. Okay, right. With respect to audit in an automated environment, explain the following. What? One, computer assisted audit techniques, data analytics, database, information system, and the privileged access. So if you see that particular chapter, at the end of the chapter, they have given a lot of the definitions over there, right? So here they are asking the questions regarding the definitions, right? So which definitions are they asking over there? One, the CATs, that is the computer assisted audit techniques, right, that are used for analyzing the data in the electronic form. Then data analytics, generating the meaningful information from the raw system data, right? So meaningful information from the vast amount of the electronic data, for which you make use of the processes, tools, and the techniques. Then database, a logical subsystem within a larger information system where electronic data is stored in a predefined form and retrieved for the use, right? So data is stored in a particular format, and also whenever required you can retrieve that data. Then what is information system? It is the collection of the hardware, software, network, and the processes that are used in the business to carry out the operations and the transaction. And last one is the privileged access, a type of the super user access who has no limit, or less limit on how he can make the entries or pass the transactions into the system, right? So that's the super user access, right? The what do you say, the CEO, CFO, they can pass an entry into any part of the computer system. So privileged access, right? So that is the privileged access, a type of a super user access. Okay, Right, so that's the definitions which have been asked in the chapter of the automated environment. Then the auditor's responsibility includes reporting on the IFC over financial reporting, which includes an understanding of the IT environment of the company and the relevant risks and control. Mention the situations where IT will be relevant to an audit. Okay, you cannot ignore the use of computers when you're doing the audit. When a client is using computers and it says you cannot ignore the use of the computers. Why you cannot ignore the use of the computer? Situations in which IT will be relevant to an audit. It says increased use of the system and application software in the business. We are making more and more use of the apps and the softwares in the business. Then the complexity of the transaction has increased. Right, so transactions are very, very complex in nature. Is again high volume of transactions, we can say. Then there is high tech nature of the business, and the volume of transactions is also very high. And it's not possible to check it manually. Then company policy, regulatory requirement, right? So it's a company policy is automated, or there is a regulatory requirement, right? You need to check the compliance with the regulatory requirement, or it is required by the Indian and international standard, or it increases the efficiency and effectiveness of the audit. So what are these? These are the situations in which IT will be relevant to an audit. These are the situations in which IT will be relevant to an audit. What does it say? Client is making more use of computers. We also have to use computers. Increased use of the system and application software in the business. Then the complexity of the transaction has increase. Then high tech nature of the business, volume of transactions are high. Then company policy, regulatory requirements required by India and international standards, and increases the efficiency, effectiveness of the audit. Okay, random selection, next question, ensures that all items in the population or within each stratum have a known chance of selection. Random sampling includes two very popular methods. Explain. Right, so one, you have the simple random sampling, and second, you have the stratified random sampling. So the entire population you treat it as one sampling unit, and you select the samples on a random basis, right, wherein each item has the equal chance of being selected. You select the items from the whole population, the sample from the whole population, and each item in the population is selected by the random number table. Right, so that is the simple random. And second, you have the stratified random, where the population to be checked is divided into the separate groups called as the strata, and then the sample is selected from each of the strata. Right, so here you select the samples from the entire population. Here you first divide the population, and then from the subdivided population you select the samples, right? So that is regarding the random selection, the two popular methods, the simple random and the stratified random sampling. Then while planning the audit of S Limited, you want to apply the sampling techniques. What are the risk factors you should keep in mind, right? So sampling, what is the risk associated with the sampling? Right, so what is sampling risk? One, sampling, it may lead to the forming of an inappropriate audit opinion, right? It may lead to the forming of an inappropriate audit opinion, and because of that inappropriate audit opinion, it could affect the effectiveness of the audit. Or second, without the need be, you end up doing the additional work, so that will affect your audit efficiency. Right, so sampling risk, it can be in case of TOC, or it can be in case of the TOD. Right, so one, it can affect the, your opinion may go wrong because of the sample, so this affects your effectiveness of the audit. And second, what does it say? That you're unnecessarily you do the additional work, so it affects your efficiency of the audit. Right, so that is the sampling risk and risk factors while applying the sampling techniques. Okay, then if analytical procedures performed in accordance with SA 520 identify fluctuations or relationships that are inconsistent with other relevant information, or that differ from expected value by a significant amount, the auditor shall investigate such differences. Explain. Right, so analytical procedures, whenever the results throw out some inconsistency, it says auditor, you should investigate. So they are saying investigate means exactly what is it that the auditor should do. So investigate means one, auditor, you should make inquiries of the management, right? Make inquiries of the management. Okay, management, how come so much of increase in your gross profit ratio? Management, how come so much of increase in your amount, what you say, your repairs and maintenance expense? So you ask the explanations to the management. Now one, the explanations may not be given by the management, or second, they are giving the explanation but you find it to be inadequate, right? So one, management is unable to provide the explanation, or they are giving the explanation but it is not considered adequate. In that case, auditor, you perform the other audit procedures as necessary in the circumstances, right? So whenever you perform the analytical procedures, by performing the analytical procedures, you may come to know about an inconsistency. If you come to know about an inconsistency, what does it say? You need to investigate. Investigate means what you need to do? You need to make inquiries of the management, and say inquiries of the management. Management is not able to give the explanation, or the explanation is not found to be adequate. Then in that case, what you need to do? Perform the other audit procedures as necessary in the circumstances, right? Perform the other audit procedures as necessary in the circumstances. Okay, right. Then what are the techniques available as substantive analytical procedures? We have 4 techniques: trend analysis, ratio analysis, reasonableness test, and the structural modeling. Trend analysis, ratio analysis, reasonableness test, and the structural modeling. What is trend analysis? Compare current year balances with the prior period, right? With the prior period balances. That is the trend analysis. Ratio analysis, asset, liability, revenue, expense accounts you analyze. So you calculate debtor turnover ratio, creditor turnover ratio, right? So that's your ratio analysis. Then what does it say? Reasonableness test, where you check it with the non-financial information, right? So non-financial data for the audit period under consideration, like payroll cost to number of employees, sales to number of goods sold. And then structural modeling, wherein using a statistical tool, you try to predict the current account balances. You try to predict, okay, how much should be the revenue of the company for the current year, or how much should be the depreciation expense for the current year, right? So what does it say? To predict the current account balances, right? So these are the techniques which are available for the substantive analytical procedures. Okay, then items of financial statement, it says how will you check the valuation of the PPE. Auditor needs to consider whether PPE is being properly valued. Then schedule 3, disclosures of the cash and cash equivalents, and the overall reasonableness of the purchase quantity and price. And we discussed these 3 questions today, right? Then after that, XYZ Limited removed its auditor by passing a resolution in the meeting of the board of directors for his removal without obtaining the prior approval of the central government, and such removal of the auditor was made before the expiry of the term of the auditor. Give your comment. If you want to remove an auditor before the expiry of his term, what do we say? Prior approval of the central government and a special resolution to be passed in the general meeting for the removal of the auditor before the expiry of his term, right? So what does it say? 1, the prior approval of the central government, and then a special resolution to be passed in the general meeting, and a reasonable opportunity of being heard is to be given to the auditor being removed. Okay, right. Then what is another question over there? S Private Limited has a paid up capital of 49 crore, borrowings from bank of 99 crore. The audit firm P and Company was appointed as statutory auditor of the company for one term of 6 consecutive years. Is the provision of rotation applicable to the company? Comment. Right, so is rotation provision applicable? Yes, borrowings or deposits of more than or equal to 50 crore, and here how much it is? 99 crore. So is rotation provision applicable? Yes, they can appoint an individual for one term of 5 consecutive years and a firm for 2 terms of 5 consecutive years. Right, so first the applicability, then it says for them the rotation provisions are applicable, so they can appoint the term only for one term of 5 consecutive years and then another one more term of 5 consecutive years. So it can be appointed for 2 terms in one AGM only. So what does it say? As the statutory auditor has been appointed in the AGM with one term of 6 years, the appointment of the company auditor is not valid in accordance with 139 subsection 2, because at one time, one term of 5 consecutive years is the period for which the appointment can be done. Yes, is the period for which the appointment can be done, right? Then you have the question regarding the audit committee, right? What are the key responsibilities of the audit committee? We already discussed section 177, the applicability of the audit committee. Right, then description of management responsibility in the audit report includes reference to the management responsibility, as it helps to explain to the users the premise on which an audit is conducted, like the precondition. Right, so in the auditor's report, you have the management's responsibility paragraph. It says, what do you write in that management responsibility paragraph? Right, so what you write in the management responsibility paragraph, this section of the audit report shall describe the management responsibility for the preparing the financial statements in accordance with the AFRF and for such internal control as management determines is necessary to prepare the financial statements that are free from material misstatement. Right, so management's responsibility for preparing the financial statements and for the internal control, and also assessing the entity's ability to continue as a going concern and whether the going concern basis of accounting is appropriate, if applicable, any matters relating to the going concern. Right, so this is required to be written in the management's responsibility paragraph in the audit report. And in case, when the auditor is forming an opinion, he need to check whether there are qualitative aspects of the entity's accounting practices, including any possible bias in the management judgment. Like, what auditor is saying, that this management is very biased. They are correcting only those misstatements which will increase the reported earnings, but they are not correcting the misstatements which will decrease the reported earnings. That's a selective correction of the misstatements being done by the management. Okay, correcting only those which will increase the reported earnings and not correcting those which will decrease the reported earning, and also any possible management bias in making the accounting estimates. Right, so again, in the calculation of the provisions, there is a management bias. Okay, right, then we just talked about the operating expenses of the bank, and then you also have the risk management system in case of bank. Then the audit of the government expenditure, that's the audit of rules and orders, sanction, provision of funds, propriety audit, and the performance audit. And then you have the question on the important objectives of the local body audit. Again, a star question, several times asked in your exams. Okay, does anybody know what are the objectives of the audit of the local bodies? Yes, do you all know what are the objectives of the audit of the local body? Local body, Gram Panchayat, municipal corporation, right? A form of government smaller than the state government, that is called as the local bodies over there, right? Zilla Parishad and so. So when auditor is appointed to do the audit of the local bodies, what are the what are the audit objectives of the auditor while doing the audit of the local bodies? Right, what are the objectives? One objective of the auditor is to report on the fairness of the presentation of the financial statement. So one objective of the auditor is to report on the fairness of the content and presentation of the financial statement. Second, to report on the strengths and weaknesses of the system of the financial control. Right, so one, to report on the fairness of the financial statement. Second, to report on the strengths and weaknesses of the system of financial control. Then to report on whether it is complying with the legal administrative requirement. Then whether value is being fully received on the money spent, and detection and prevention of any error, fraud, and the misuse of the resources. Right, so 4 points of reporting, and 1 point is detection and prevention. Right, so reporting on what? The fairness of the content and presentation of the financial statements. Then reporting upon what? The strengths and weaknesses of the system of financial control. Then reporting on the adherence to what? The legal and administrative requirement. Then reporting upon whether value is being fully received on what? On the money spent. And then the detection and the prevention of the error, fraud, and the misuse of the resources. Right, so what are these? These are the objectives of the audit of the local bodies. What are the objectives? Reporting, 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 detection and prevention. Reporting on the fairness of the content and presentation of the financial statements, then reporting on the strengths and weaknesses of the system of the financial control, then reporting on the adherence to the legal regulatory requirements, then reporting on the whether value is being fully received on the money spent, and detection and prevention of the fraud, error, or the misuse of the resources. Okay, right. So see, effectively have we managed to complete all the questions in the yes, RTP May 23 over there. Okay, right. Some of you are asking me a question regarding this, mentioned over there regarding special audit question, right? So now say, let's take the example of one special institute over here, different type of entity over here, say audit of the hospital. Yes, all of you collectively put together, can you throw away some, can you disperse some points which could be there while doing the audit of the hospital? What all points should be checked? Say this question is asked in the exams for 4 marks. What will you write? 4 मार्क के लिए क्वेश्चन आया है कि हॉस्पिटल का ऑडिट कीजिए, तो क्या करोगे? क्या क्या चेक करोगे? यस, so some students are like that. Now they say we will write in the exam. Or if you're not able to tell anything right now, what you will go and write in exam? That day some miracle is going to happen or what? And some students, they have a problem with giving the answer right now because they say, ma'am, day of exam. Arey, day of exam, you will do blunder. You understand? No, so you better give the answer right now. Yes, what you will do the audit of the constitution of the hospital. You will go through the rules and bylaws. You'll go through the accounting policy, the minutes of the meetings of the managing committee, the list of books of account which have been maintained by the right, the list of the books of account being maintained by the hospital, right. Then also you need to check regarding the receipts of the hospital, the receipts from the patient, so that you need to check it with the entries being made in the patient register and also the collections which have been registered in the cash book. Then any discount given to the patient, whether it has been properly authorized, right? Any discount given to the patient, whether it has been properly authorized. Then the hospital might be having the excess income, so that excess income they would be, keeping it in some investments, right? Excess assets, income, so that they might be keeping in the investment. On that investment they might be earning the interest and dividend income, right? So you need to check whether investment income like interest and dividend, has it been properly accounted for. Then on that interest, the TDS might have been deducted, but these institutions are exempted from the payment of taxes. So you need to check whether the refund of the TDS has been claimed and recovered, as generally these institutions are exempt from the payment of the taxes. Because if say they have kept an FD with the bank, for that FD they get the interest. When they get the interest, the TDS is deducted. So that TDS, generally you claim it against your tax liability, but here these institutions are exempt from the payment of the taxes. So that is why the TDS, whether deducted, whether it has been claimed and recovered, as these institutions are exempt from the payment of the taxes. Okay, right. Then after that, what you need to check, the expenses, the authorization of the expenses, right? The authorization of the expenses, you also need to compare them, actual expenses, with the budgets, yes, or budgets which have been prepared by the hospital, right? Then after that, you also need to check any grants received, any donations received, whether they have been used for the purpose for which they have been received, right? The grants, donations. Then you also need to check the inventory, whether it has been properly valued and also physically verified. Right, so this is how you can write the answer for a hospital, right? So this is example of how you can write the answer for the audit of a hospital. Is it clear to all of you? Okay. GST, okay, so in case if they have the GST liability, then again whether it has been correctly accounted for and paid. Yes, all good everyone? Yes. Are you able to get an idea, some recollection of the chapter of the special institutions over there? Right? What are the books of account to be maintained by an LLP? Books of account to be maintained by an LLP. Right? What are the books of account? LLP, one, they require to file the annual return in form 11. right? They are required to file the annual return in Form 11. And second, they are required to file the statement of the accounts and solvency in Form 8. Right? The statement of the accounts and the solvency in Form 8. Okay. Right. What are the books of account to be maintained by an LLP? All sums of money. If they own the pharmacy, okay, then the medical, whatever medicine, sale of medicine, whatever income is there, okay, but stick to what is there in the study material of ICI. So if this point is not invalid, but it's not a point which is there in the study material, sum of receipts and payments, okay, right, all sums of money received and expended by the company or matters in respect of which the income and expenditure take place, that is the cash book. Then the assets and liabilities of the LLP, that is the balance sheet of the LLP. Then the statement of the cost of goods sold, cost of goods purchased, right? So that is the COGS and so. And then it says any other particulars as the partners may decide. Any other particulars as the partners of the LLP may decide. Right? Any other particulars as the partners of the LLP may decide. What are these? These are the books of account to be maintained by an LLP. Right? What are these? These are the books of account to be maintained by an LLP. Okay. Right, if applicable cost records, but there in a case of LLP specifically, there is a point that any other particulars as the partners may decide, right? So you need to write down that point over there. Okay, what are the qualifications for the auditor of a cooperative society? Before we go to MCQ, one last question over there. What are the qualifications of the auditor of a cooperative society? Cooperative society, who can be appointed as an auditor of a cooperative society? Number one to CA, chartered accountant, or yes, a person holding a government diploma in the cooperative accounts. Person holding a government diploma in the cooperative accounts, or a person who served as an auditor in the cooperative department of the government, or a person who served as an auditor in the cooperative department of the government, right? So chartered accountant, government diploma in cooperative accounts, or a person who served as an auditor in the cooperative department of the government. Who can be appointed as an auditor of an MSCS, multi-state cooperative society? Multi-state cooperative society, only chartered accountant. And there you don't have this government diploma in cooperative accounts or a person who served as an auditor in the cooperative department of the government. There you only have multi-state cooperative society, only a chartered accountant can be appointed as an auditor, right? Only a chartered accountant can be appointed as the auditor. Okay. Right, so now let's do a few more of the MCQs over here. So reporting on fraud is to be made by an auditor to the central government when the fraud amount is. You want me to give you the options? Seriously? Or without the options only you can tell me? Yes? Is to be made by an auditor when the fraud amount is 1 crore or above, right? So 10 lakh, 50 lakh, 1 crore or 1 crore or above. Yes, when it is 1 crore or above. Wonderful. Next one. Reporting on fraud is made by the auditor to the central government in the statement in the form. Which form? In which form does the auditor do the reporting of the fraud to the central government? In the form A, D, T dash ADT 1, 2, 3, 4, ADT 4. Correct. The ADT 4. Okay. Next one. Reporting on fraud is made by auditor under which of the following clause of CARO? Right. So under which clause of CARO fraud reporting is required to be done by the auditor? Under clause which? 1 to 21. You have 21 options over there. Out of that 21 options, tell me one option where you will do the fraud, the reporting of fraud and caro reporting. You will do it under the clause, yes, the clause 11 of the caro. So 11, 12, 13, 14. No, we need to do the reporting under the clause 11 of the caro. Whether any fraud on the company or whether any fraud by the company has been noticed or reported during the year. If yes, the nature and amount involved is to be indicated. Okay. Which of the following is a general IT control? IT environment, application control, access security, or the IT dependent control? Which of the following is a general IT control? IT environment, application control, access security, or the IT dependent control? Which is a general IT control? The access security. What are the general IT control? Data center and network operation. Then the program change control, access security control, and the application system acquisition, development, and maintenance control. Right. So which of the following is a general IT control? The access security control. Okay. Which of the following is an automated control? Which of the following is an automated control? Program change, system generated report, application control, or the configurations? Let me see your answers. Quick answers I want. Which of the following is an automated control? Program change, system generated report, application control, or the configurations? Automated control, automatically. If it is configured, right? So the configurations, right? That's the automated controls. Okay. Who is mainly responsible for implementation of IFC in a company? Right? The internal financial controls in a company. Auditors, directors, employees, or the regulators. So who is responsible for the implementation of IFC in the company? The directors of the company are responsible. Okay. Next one, the guidance note on audit of the IFC over FR, the internal financial controls over financial reporting, has been issued by, yes, by ICAI, SEBI, MCA, or the RBI. The guidance note on the IFC has been issued by the ICAI, the Institute of Chartered Accountants of India. Okay. The standard that requires auditors to analyze general entries in an audit is, I think you have recorded some fictitious journal entry, that too particularly close to the end of an accounting period, to manipulate operating results or to achieve other objectives. Which standard tells the auditor, analyze journal entry? Which auditing standard? 260, 230, 315, or 240? Right, so it is SA 240, the auditor's responsibilities relating to fraud in an audit of financial statements. Okay, right. In WH Limited, every business activity was being carried out manually. The top management of WH decided to change the business environment of WH by using computer systems and computer system related technology to carry out all the major business activities. This business environment of WH Limited, where all the major business activities are done using the computer system and the computer related technology, is an example of. Don't smile, don't say anything. Operational environment, computational environment, control environment, automated environment. What is it? Automated environment. Correct. Next one. Dash are also known as the pervasive or the indirect control. Right? Dash are also known as the pervasive, overall, or the indirect controls. What are also known as the pervasive or the indirect controls? The general IT controls, right? The general IT controls are also known as the pervasive or the indirect controls. Okay. Dash is a combination of processes, tools, and techniques that are used to tap vast amount of electronic data to obtain the meaningful information. Likho jaldi jaldi answer. No need for the options. You can just directly give me the answer. Dash is the combination of the processes, tools and techniques that are used to tap vast amount of the electronic data to obtain the meaningful information. So processing the data to obtain the meaningful information. For that you use the processes, tools and techniques. It is referred to as the, yes, data analytics. It is referred to as the data analytics. Okay. Next one. Dash are manual or automated procedures that typically operate at a business process level and apply to the processing of the individual applications. So manual or automated procedure. So what could be manual or automated? Right? The application control, general IT control, process control, all of these. So application controls could either be manual or automated that operate at the business process level and apply to the processing of the individual applications. Okay. Next one. Dash are the manual controls that make use of some form of data or information or report produced from the IT systems and applications. Right? So basically these are manual controls, but they make use of the data, the reports generated from the IT system. So what are those? Those are the IT dependent control. What are those? Those are the IT dependent control, are basically the manual control that make use of some data which is generated from the IT systems and the application. Okay, Dash is a logical subsystem. We just saw this within a larger information system where electronic data is stored in a predefined form and retrieved for use. So where electronic data is stored, that is called as data mining, data warehouse, database or data analytics, right? So it is called as the database, right? It is called as the database. Okay, next one. Dash is a control deficiency or a combination of deficiencies in internal control that is important enough to merit the attention of TCWG, since it is a reasonable possibility that a material misstatement will not be prevented or detected in a timely manner by the management. Right? So material weakness, material deficiency, control risk or the significant deficiency. That a material misstatement will not be detected, not that a misstatement will not be prevented. A material misstatement will not be prevented or detected. That is why it is material weakness. Had it been only reasonable possibility that a misstatement will not be prevented, then it would have been significant deficiency. But because it says a material misstatement will not be prevented or detected, that is why we say the material weakness. Okay. Next one. Who among the following is required to comply with section 149 subsection 8 read with schedule 4 to the Companies Act 2013? What is section 149? It is regarding the 149, it is regarding the independent directors, right? So board of directors, audit committee, statutory auditor, independent directors. No, it is regarding the independent directors, right? It's regarding the independent directors. Okay. Next one. Which of the following audit testing method is most effective as an audit evidence and gives the best audit evidence? So most effective also testing methods, inquiry, inspection, observation, reperformance in an automated environment, which is the most effective as well as gives you the best audit evidence, right? Which is the most effective as well as it gives you the best audit evidence over there. It is the reperformance. It is most effective as well as it gives you the best audit evidence. Right, most effective and gives you the best audit evidence. Okay, but least efficient. Okay, user training, okay, you have to give the training to the users, is an activity relating to which of the following general IT control? So when you have to give the training to the users, data center and network operation, program change, access security, application system acquisition, development and maintenance. So whenever there is a program change, you have to give the users the training, right? So whenever there is the program change. Okay, the objective to establish security policies and procedures is to ensure that production systems are processed to meet financial reporting objective, to ensure that modified systems continue to meet financial reporting objective, to ensure that access to program and data is authenticated and authorized to meet financial reporting objectives, and to ensure that systems are developed, configured, and implemented to meet financial reporting objectives. What does it say? The objective of establishing the security policies and procedures is to ensure that access to program and data is authenticated and authorized to meet the financial reporting objectives. Okay. Right. Then IT related risk, if not mitigated, may put an impact on substantive audit, controls, reporting, all of the above. IT related risks, if not covered, if not mitigated, it may have an impact on substantive audit, controls, reporting, all of the above. Right? It may have an impact on all of the above. Right? It may have an impact on all of the above. Okay. Right. Next one. Which of the following audit testing method gives the least audit evidence? So it is most efficient, but it gives you the least evidence. You do all of it, but evidence, kuch nahi. Evidence, nothing. Right? Which of the following audit testing method gives the least audit evidence? Which gives you the least audit evidence over there? The inquiry. Right? It gives you the least audit evidence. It gives you the least audit evidence. Okay. Applying dash gives the most effective and efficient audit evidence while using the audit testing method. So what gives you the most effective and efficient audit evidence? Inquiry in combination with inspection, inspection in combination with observation, observation in combination with reperformance, reperformance in combination with inquiry. Right? So inquiry in combination with the inspection gives you the most effective and efficient audit evidence while using the audit testing methods, right? So inquiry in combination with the inspection gives you the most effective and efficient audit evidence. Okay. Dash are needed to support the functioning of dash. Dash are needed to support the functioning of dash. What is required for what? It says the general IT controls are needed to support the functioning of the application controls, right? The general IT controls are needed to support the functioning of the application controls. Okay. Next one. The main advantage of using statistical sampling is that such techniques main advantage of using these statistical sampling techniques is that such techniques mathematically measure the risk, eliminate the need for judgmental sampling, defines the value of tolerable error, or all of them. Right? Main advantage of using statistical technique is that it mathematically measures the risk. Right? It mathematically measures the risk. Okay. Next one. Which of the following factor is considered in determining the sample size for TOC? Projected error, tolerable error, expected error, both B and C. What do you consider when you have to decide your sample size for TOC? Projected error, tolerable error, expected error, or both A and B and C? Right? So what is it? Both B and C, right? The tolerable error and the expected error. Both you consider while deciding your sample size. If tolerance is more, sample size decreases. If expecting more errors, you increase your sample size, right? That is, you do more checking. Okay. Tolerable error is the maximum monetary error that the auditor is prepared to accept in the population and still conclude that the audit objective has been achieved, is directly related to sample size. So if my tolerance increases, my sample size decreases. Then audit risk, materiality, expected error. So if I can tolerate more errors, is the maximum monetary amount that the auditor is prepared to accept and still conclude that the audit objective has been achieved, is directly related to the audit. Yes, it is related to the audit materiality. Yes, it is related. Okay, so more tolerance, the higher the amount of the materiality. Okay, right. Next one. Right, which of the following is a source of non-sampling risk? Okay, it's not due to the sample your conclusion went wrong. Your conclusion went wrong for any reason other than sample. Human mistake, applying audit procedure not appropriate to the objective of audit, misinterpreting the audit result. That is why conclusion went wrong, or all of the above. Right? So, which of the following is a source of non-sampling risk? All of the above are the source for the non-sampling risk. Okay. Right. Which of the following is more scientific? What do you think? Which of the following is more scientific? So easy, easy. No? Yes? Which of the following is more scientific? Could be statistical, non-statistical, both A and B, none of the above. Okay, what do we do? Yes, statistical. Which of the following is more scientific? It is the statistical sampling. Okay. As the number of transactions of WY for 2018-19 were in very large number, the auditors of WY decided to use the technique of audit sampling. Before selecting the sample from repairs and maintenance, the auditor of WY wished that the entire data of repairs and maintenance should have three characteristics. Right? These three characteristics are, yes, the characteristics of the population. It should be simple, complete, relevant, appropriate, simple, relevant, reliable, simple, relevant, appropriate, complete, reliable. Simple to nothing like that. So what it should be? It should be, yes, exactly, appropriateness, completeness, and the reliable. The data from which the sample is to be selected. How the data should be? It should be appropriate, it should be complete, and it should be reliable. Right? There should be completeness of the data, and the data should also be reliable. Okay. In random sample, each item of the population has equal chance of selection, varying chance of selection depending upon placing of items, may have a chance of selection based on the auditor's professional judgment, all of these. In random sample, each item of the population has an equal chance of being selected, right? It has an equal chance of being selected, right? So what we have done over here, we've tried to do a few more of the MCQs also, right? So just as we had this entire 3 days of the discussion of the, yes, what name to give to the batch? So thought of inter-audit knockout series over there. So I hope these series have been beneficial. You've given me your precious time, and I hope I have been able to do justice to that such a precious time of yours, because just few days before the exam, I know what situation and what mindset and what type of concern you would be having right now. So I hope that I have given some boost to your preparations for the exam, some, that addition, that whatever say, that support, or that additional input which was required, and the subjects or the chapters which probably you ignored, that you have covered those areas well in this class, right? So wishing you all the very best, hoping to listen about your successful results in the near future, and also, yes, wishing to, willing and wishing and waiting for, to see all of you at the CA final level. Right, so thank you so much for your patient listening, and it's only because of you that I could take the class. So my special thanks to all the students. Bye bye, and write wonderful exams. Okay, bye bye. Have good confidence. Okay, yeah, so see you in CA final. Great.